So let's welcome on board right now Dhimant Mehta, the chairman at Cement, Stockist and Dealers Association of Bombay, and Ronald Siyoni, research analyst Infra and Cement at Sharekhan, both of them joining in on the show right now. Gentlemen, both of you, Dhimant as well as Ronald, good to have you on the show. Let's first start talking about, what the channel checks have been suggesting with regards to pricing in the first quarter, because it seems like there's been a decline of 2 to 2.5% sequentially after a slew of attempted but unsustainable price hikes in the month of April and June this year. And now with the onset of monsoon, where is it, Mr. Mehta, that you see prices headed from here?
Good morning, ma'am. Thank you. The prices, exit March prices and June prices, there is a difference of almost 8 to 10 rupees per bag. That is almost 200 rupees per ton. But I don't see any further decline in prices because a lot of high cost players would not be able to sustain the price decrease anymore. So what I believe is that although the demand will be less in the this quarter, prices would not fall down further this quarter. There might be a traction of almost 5-7 rupees, but not more than that.
Right. Ronald, now that price hikes are not expected anytime before the second half of the next fiscal, for the full year, how much cement price hike should one expect and anticipate?
Yeah, good morning. So, so yeah, as as per channel check, the Q1 prices are already 3 to 4% lower sequentially as per our channel checks. While April month had been low on demand, but May and June the demand has seen a good pickup. Rail cement transported through rail has risen by 11% compared to the April month in both the May and June month. So you may see stability in prices or marginal uptick in the prices, but S2 would be a critical period where the cement prices would be the monitorable, because there, if the cement players are able to hike the price, then you may see a 2 to 3% annual price increase for FY25. But if they are not able to undertake any price hikes during second half of FY25, then the prices may remain flattish to marginally lower for the full year.
Right. Let's talk about some of the valuations in the market. Now the talk is that a couple of half a dozen players are also up for grabs, Ronald. Which, to your mind, are the valuations at which, and no one would overpay, right? No matter how much inorganic plan there exists, but people would like to pay a fair price. Which are the companies that you think are or should be, kind of takeover targets? Valuations are fine, unable to scale up big time so far individually, but become a part of a larger group, perhaps.
Actually, it's very difficult to pinpoint any valuation targets, because it would be a very speculative in nature. But it is a win-win situation for both larger and smaller players, because players like Ultratech and Ambuja, if they penetrate in southern region, then there is, of course, you are seeing pressure on valuation of Ramco Cement. So that kind of regional pressure could be there wherever this larger players grow. So if smaller company wants to sell their stake in their own company, then it would be a win-win for both, and arrive at a near to around replacement cost valuation, say around $80 to $90 EV by ton, as we have seen in the past. So this could be a fairly valuation for this smaller companies, provided the plants are good. They have limestone reserves. There are integrated plants. So the valuation of this kind can be there, but it would be too speculative to pinpoint the names here.
Okay, fair enough. But just curious, owing to the kind of major consolidation, that we've seen play out in this space. Mr. Mehta, I wanted to get in a sense from you just overall in terms of the demand recovery that we've seen in the months of May and June. That has been quite resilient. It's been quite strong. Do you think that for the second half of FY25, an estimate of 8 to 10% growth would be fair?
Yeah, ma'am. Look, as such, infrastructure is going to be very good. If the monsoons are good, then you will find very good rural demand from IHBs. And most important is the real estate sector, which has showing very good signs. So I don't see any difficulty in the demand on the demand side. The basic problem regarding the prices would be to gain the market share. Now the major players are in a move to gain more market share, which might affect prices. But I think so from H2, the prices also will be improving.
Okay, you see prices improve on H2. What kind of improvement? 3 to 5% or something material?
Now that is a difficult question because still the demand supply equation is not in favor of higher prices, but how people are getting disciplined will impact the pricing.
Out of the big 4-5 names, next 2-3 years, almost each of them have given out their capacity addition targets, and one would assume that they are a combination of organic, inorganic. But net, where do you see most aggressive ramp up as far as capacity goes out of the big 4?
They are doing very well as far as ramping of capacity is concerned. Adani is doing well. Might be to a certain extent, Shri will do. But you will have to understand that there will be in every region, there will be around 6 or 7 major players, 2 or 3 regional players, 2-3 national players who will be permanently stationed over there. So whatever level of M&A is there, there will be at least 6-7 players in each of the market.
Okay, fair enough. Let's get a sense from you then, Ronald, as to how you believe investors should really be looking at the market as of now. Would you be, when it comes to looking at stocks within this space, just stick to some of the top names, or would you even venture to some of the mid-cap names owing to the kind of consolidation and news flow?
Yeah, so on the valuation front, we have seen, Ultratech has seen a good valuation of around 18 to 19 EBITDA FY26 earnings. But other players like Sri, Dalmia, Ramco, JK Lakshmi Cement, these have not, seen improvement in their valuation multiples. Ultratech has far outperformed. ACC Ambuja is not under our coverage, but we see that Sri Cement should catch up on valuation front with Ultratech, at least not on premium, but at least at par to Ultratech. And Dalmia Bharat, Ramco Cement, and JK Lakshmi Cement should see an improvement in valuation multiples. So any correction in this whole pack of cement space would provide a buying opportunity. There would be a quarter, week or two here and there, which would provide buying opportunity in the cement space, because over the next 4 to 5 years, the demand trajectory or the demand outlook is pretty much certain for the sector.
Right. Ronald, thank you so much for taking the time out and joining us today. Mr. Mehta, glad that you could take time out and speak with us too.
Thank you.
If you like this video, then like, share and subscribe to ET Now.